The following is a presentation of TFNN. The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us. We have the Dow Industrials right now down 12. Nasdaq's up 9. S&Ps are up 1. We have the gold contract up $1.40. Silver's up 2 cents. Oil's up $1. We got the 10-year notes down 10 ticks. The bonds, 30-year bonds off 12 ticks. Good old King Dollar is up by 347 ticks. We got Fed, 2 o'clock, volatility.
It looks like the market's just waiting for 2 o'clock like us, right?
It's waiting, man. It's waiting with bated breath.
It is.
And, you know, each and every day, folks, this volatility has been absolutely amazing. We have our man, Mr. Kevin Hinks, with us, as we do every Tuesday, Wednesday, and Thursday. And, of course, Kevin has an outstanding show on TFNN every day, 12 to 1 Eastern Standard Time. So wherever you are in the country right now, folks, listening in your car, remember that right on your cell phone, just go to TFNN.com, hit Tiger TV. When you hit Tiger TV, you get all our programming, 12 to 1 Eastern Standard Time, swim lessons. And when we talk about volatility, talk about options, bottom line, if you trade them, folks, you want to be listening. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
How you doing, man?
All right, Tom, I want you to close your eyes.
Okay.
And I want you to listen to what I'm saying.
I'm closing them. I got them closed.
And
I'm
you
closing them,
explain
too.
to me what the problem is. The 6-month average on non-farm payrolls is 235,000.
Yep.
The unemployment rate is 4.9%, which is the target. And the S&P is 5% off its all-time high.
I know.
What's the problem?
I know. No, I listen.
We need zero rates, that sounds like, right?
Right. Exactly.
Yeah.
Seriously.
Someone explain to me, what is the problem here? Why our economy appears to be so fragile.
Right.
You know what? It blows my mind. That's all you keep hearing on a continual basis. You know what I've always found, Kevin, though? You know what is really weird? Is that, and this has happened for years, people say, oh, this is bad, not bad. And I look at them, I says, well, how's your life? And they say, well, my life's all right. I said, so what happens? Is this just a mantra that you just keep saying and saying that everything's bad, but you're doing all right? Right. I try to figure that out sometimes. You know what I mean?
You know, the market rallied from the 2007, 2008 crisis.
Right.
When the economy wasn't doing very well, and we rallied most of the way back.
Right.
Right? Because why? Because of lower interest rates.
Sure.
Because of basically zero interest rates.
Right.
Now we have to raise them. Right? It's the right thing to do. So I think it's, you know, like I said, Tom, you and I have talked about this before. There's no history.
No, there's not.
So the one thing you can expect, volatility.
Yes.
And remember, you got quadruple witching coming up on Friday, so
Yeah.
it's going to pick up pace a little bit.
It's going to pick up pace. It is going to pick up pace. You know what?
Yeah.
I'm so right now I'm shot the notes, right? And I'm even trying to figure out. I'm saying to myself, you know what? They're saying that they want to go up, but even in my own head, I'm saying because the market took 2 hits when they just talked about it, I'm saying they're not going to go up. But the market itself, this seller's in those notes, man. Do you know what I mean? They're selling those notes away. So it's like,
don't you think, Tom? Much like what you're talking about, I think the world wants to be short notes and short bonds, right? They think that's the right, fundamentally sound trade.
Right.
You know, how many times I've walked off the floor in my career and said, you know who's making money right now? The absolute irresponsible position is the one making money right now.
Right.
How could you ever be long bonds here?
Yeah.
Yet, that's what's made money. It's amazing. But
no,
every
it
now and
is.
then
It
you
is.
see market,
Listen,
right?
and it is no doubt coming into this meeting, I'm nervous. You know,
Right.
it was nice. It was a nice little downdraft this morning, so I took off about a third of the position. I said, I'll take some bread right now. I'm not going to go, wild here.
Yeah.
Do you know what I mean?
Think how much you would have made if you were long bonds
Well, I got-
in their last meeting, right? When they raised
Yeah,
the rates.
remember what we say, right? We're in the moving business. Not the store.
Totally, man. Totally. Well, there's no doubt, man. So, hey, listen. I mean, this is a great day before the you have before the Fed meeting, your program at 12 to 1, and then you have of course, quad witching this Friday.
Right. Yeah, it's going to be, like I said, the week started out slow, and Tommy, you were exactly right at the beginning of the show. Everyone's just waiting for 1 o'clock. Yeah. But here's what I guarantee you. Once this decision comes out at 2 o'clock Eastern time, everything's going to pick up pace.
Sure.
Yeah.
Yes.
Week. That I guarantee.
That's right.
I don't guarantee very much.
You make sure all your bathroom runs are done before 2 o'clock.
That's
folks.
right.
The essentials, right?
Oh, that's crucial, man.
You're going to need to be at that desk at 2, right?
You better be, man.
Yeah, things are going to pick up pace. Guess what we're talking about today? Perfect topic for today like this, gamma. The acceleration of delta in your position.
That's huge, man.
Today.
Yep.
Yes.
No doubt. And folks, 12 to 1 Eastern Standard Time. And remember, no matter where you are, if you haven't tried it on your cell phone, folks, go to TFNN.com, hit Tiger TV. It will absolutely blow your mind how clear the charts come in.
It's HD. You can pull up the charts. You can see everything for sure.
It's unbelievable,
I do it
man.
myself all the time.
I walk around with my phone.
I do it too.
It's crazy, man. You gotta love technology, Kevin, right?
Oh, man, it's a beautiful thing.
Totally.
Embrace it.
I know, man. Well, listen, you have a great day, safe day, and of course, we look forward to the show at 12 o'clock.
Always great talking to you guys. Have a good one.
Have a good one,
man.
Kevin.
Have a great one, man. Have a safe one. The this market, man. You know, it's a mind blower, man. It's blowing my mind that the S&P still want higher price. I mean, so no matter what they have to say out here, this thing just won't, basically back off. You stay right there, folks. Tommy and I are coming right back. Right now, you have the Dow down 2, Nasdaq's up 10, S&Ps are up. S&Ps are flat, and gold is up $1.70. We're gonna be right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. We have the Dow down 5, Nasdaq's up 9, S&P's a flat. And so check this out. This is, we're talking, of course, this is a great day to talk about the negative rates anyway. Over in Germany, so this cash in vaults tested by Munich Re as banks charged to hold funds. Munich Re, now Munich Re, I believe, is a huge insurer, okay? Is restoring to the corporate equivalent of stuffing notes under the mattress. Yeah, it's the world's second biggest reinsurer seeks to avoid paying banks to hold its cash. The German company will store at least 11 million. That's nothing, though. In two currencies, so it won't have
It is interesting, though. It's a start, right?
Yeah,
That's
it is.
probably what...
Yeah.
Because it is. It's literally storing cash under your...
Right.
I mean, you've seen that the world in general has tried to avoid having a stockpile large amounts of cash because that's the easiest way probably for you to lose it, right?
Right,
Somehow.
exactly.
So,
exactly.
the bank heist, the Lufthansa, right? That wouldn't happen these days anymore. Nobody would ever have...
This is good for the bank robbers.
It is. That's what I was actually thinking. I was like, wow, so now there's going to be stores of cash everywhere, or stores of... Even if it's gold or if it's whatever it is, right?
Oh, yeah. So institutional investors, including insurers, savings banks, and pension funds, are debating whether to store cash in vaults as overnight deposit rates fall deeper below zero and negative rates dent investment returns. The costs associated with insurance and logistics may outweigh the benefits of taking
money's
the step.
insured. You're all set. Don't even worry about it, right?
Yeah, I know.
That's good to hear as a bank robber, too.
I know. Yeah. Munich Re's strategies, if followed by others, could undermine the ECB's policy of imposing sub-zero deposit rates to push down credit markets. You see that? And that's
what you've been saying about gold, which is the same thing. I mean, there's no reason why they just can't. I mean, you're trading gold. I guess if you want to have no volatility or exposure to the market, you just want straight cash. But I could see a lot of people deciding to store gold instead, right, for the same reason, and still disrupting the ECB's policy.
Yeah.
For sure.
And what is also happening, and this is where Larry Summers, that's why Larry Summers come out saying he wanted to get rid of large bills.
Yes.
What happens, folks, is that the large people holding cash disrupts the power structure. That's what it does.
Well, yeah, because regulations sometimes are used to inspire or enforce, public actions, right?
That's what they're doing.
Right.
No, there's no doubt. They want to
can control a lot more when they get to jack or lower that interest
rate
on every dollar that you have.
Now, the wild thing there, and absolutely that is the thesis, no doubt. The thing that's weird is that, like, our Fed is still paying interest on overnight deposits for all the banks, which makes zero.
And what are they paying?
Like, it's 1/4. It's 25 basis points.
Is it even an eighth of a point, or is it?
No, 1/4 of 1 point. So 0.25 of 1.
0.25. Okay.
Yeah. But picture this. So I'm the other central bank, right? It's just a book entry. My reserves is in you, but you're paying me. It's like, why? If they really want me to push the money out, do you know what I mean? It's like, why are you paying me?
Yeah.
You know what I mean?
Yeah. No.
So there's a disconnect there. And you know what? When I start talking about this, it'd be really weird if that's the announcement they have today versus going up on rates. Because they could do that.
Okay.
Because that would be basically going down. No, what would that
This
be?
is just such a you're getting into a highly technical conversation of FOMC, fiscal.
Yeah.
Yeah. I think we're missing a few of the crucial details to break down the FOMC. That's all.
Well,
I mean, we're comparing how I like to have all the actual facts as I break down because I don't know if these numbers that were.
No, I understand the context. The context is, how does the Fed pay banks? But they do. And that started in 2007. So if they really want to push money out into the system, they shouldn't be paying the banks overnight rate, basically. So we'll see how this baby is shaking out at 2. This is going to be wild watching this whole thing shake out, particularly. So let's go over to that gold market for a second. I suspect it's going to be gold, bonds, and the dollar that probably. Right now, the gold's not saying much, man. So yesterday, I like what it did. It got down into the lows, rejected the lows. Thus far this morning, it's really not giving a clue of what it wants to do. You first go down. If we look at this contract, you had volume there at 830. It tested with lighter volume, but now we haven't had any strength. So
we got oil numbers coming out.
Oh yeah, now,
right after this break.
This is cool. Oil's catching a bid. This is really cool. So oil started off slow this morning, and then it caught a nice bid. Look at that. So that's at 10:30, right? Is that what happens?
Yes.
Okay, cool. That's awesome. That we had oil. Let's see. That's 16,000 contracts. You're following up with some decent contracts. Yeah, oil's catching a bid. And so, of course, that for the S&P, get down your Nadex trades, there's no doubt. Line them up. And I'm sure, let's see, that S&P, I got a long way to go on that S&P, don't I? It's Wednesday already.
I think you're at 2056.
Well, that's
and
not
it's
that
at 2007 right now,
Okay.
right? So you got, it was at, I think, 2004 when you made the trade. So,
Okay.
it's up 2 points in 2 days. But you know what? A lot of the action that's going to drive that is going to be at 2 o'clock.
It's 2 o'clock.
Today will make or break that trade for you, probably, right?
Yeah, I agree. Yeah, there's no doubt. What is intriguing is that because we have option expiration, too, that the next 3 days could be really wild.
They could, for sure.
Which would be just
And
dynamite.
that's, again, you're way out of the money, but, you're only about 50 points out of the money right now in the S&P, and over the course of 2 days, even if it moves 10 points against you today, you could get 60 S&P points in Thursday and Friday.
You know what's so funny about that? Is that sounds so crazy if you had said that like 10 years ago.
I'm sure.
You know what I mean? But now it's normal. Yeah, 50 S&P points happen like once every month or something.
Yeah, now that's 2.5%, but we've gotten 1.5% moves fairly common.
Oh, totally,
fairly,
man.
For sure.
There's no doubt, man. There's no doubt about that. Look at this. Here, when we come back, we're going to bring this up. Folks, if you haven't test drove the Nadex platform, do yourself a favor. Go over and open up the account. It doesn't cost anything. Open up the account and put on some trades so you can see how they move when the Fed comes out.
So it's interesting to see, right? That market is basically almost right where it was. It was at like 1/6 or 2/7 when you bought into it. So it's slightly even above it. So basically what you can tell is that a lot of that premium looks like it was priced in for Wednesday, Thursday, and Friday.
Yeah.
Right? Because it's just slightly above where it was with 2 days less till expiration.
I know.
So you'd think that there was more premium sucked out of it because of those 2 days. But guess what? Those 2 days weren't really important.
No. And that's where, folks, 12 o'clock swim lessons,
Yes.
If you listen to Kevin, Scott, and Cindy, you're going to learn a huge amount about volatility, about delta, about gamma, and that's what's going on right here. They put juice into this beyond belief today.
For sure.
And this will get crushed, folks. At 2 o'clock,
Right, for sure.
it's going to get crushed.
And, what's happening? We got oil. This is oil. We're almost at $40, $39.36. We'll see what happens.
Oh, it's going to be fun.
Yeah.
No doubt. You stay right there, folks. Tommy and I are coming right back. Dow right now is down 8, Nasdaq's up 9, S&P's are flat, gold's up $1.50, silver's up 5 cents. Bonds, both the 10 and the 30 are down 9 ticks apiece. We're going to be right back.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow right now down 5, NASDAQ is up 7, S&P is a flat. Oil numbers come out, and it's catching a bid, a small bid. Well, it's just starting.
Yeah, so it looks like inventories rose 1.32 million barrels. But like anything else, what was the expectation, right?
Yep. And so we just went from looks like 320 to 340.
39.20 to 39.40.
Yeah, thank you. And that put the Dow positive. This is gonna be wild watching this whole thing shake out. To see if oil can stay up, because there's no doubt.
Go back to the main screen.
There's no doubt. What ends up happening is that oil market, the oil contract, still runs the market right now. That's what we have happening. Let's go to Mike in Dallas. Hey, Mike, what's going on, brother?
How you doing, Tom?
Doing great, man. Yourself?
I'm doing great. Listen, I'm in the same trade you are with the NQ at 2056.5 on the binary.
Okay.
Now, my question is this. I know where the market is right now.
Yeah.
If I take the average true range for the E-mini, which is 28.59, and I add that to the Globex low of 1997, I'm coming up with approximately 2025 on the E-mini.
Okay.
Now, from where I purchased it, which is at the same price you did, would I be looking at approximately $20 to $25 profit per contract?
So you're saying what price point, Mike, are you expecting the S&P to move to exactly? In that
2025.
2025. Okay, so like 20 points above where the market is right now.
Right.
So the best way to do that is to look at, so your binaries are 2056. If you pull up the weekly binaries, and you want to look at the different markets, let's say 20 points above, or below it, so yours is at 2056 right now, but let's say if you got 24 points of movement, right, it would be akin to the 2032 market, which is right now trading at 17 by 23. Okay? So if you were going to sell it, you'd have, and that's for a 24-point movement. the market, and that's if that happened, in an instant, because time is factored into there.
Right.
Absolutely.
But that's, and I pointed this out to you,
Yesterday.
the same thing,
Yeah,
right?
which is cool.
Where I said, and that's a great way when you're trading these to say, if I got 12 points of movement, immediately, what would my binary be trading at? And as long as there's an active bid and offer on the binary that many points away from it, that's a really good indication of what that would be worth.
Okay. Very good. Well, you answered my question, and I appreciate your help.
Perfect. We'll see what happens on that binary today, man.
Okay. Hey, thanks.
Thanks, Mike.
man.
Take care.
Have a great one. Have a safe one. You
said there were tigers out there on the offer, right?
Exactly.
I wonder if that was Mike or another tiger.
Exactly.
You want to look at oil? Is that what you're saying?
Please.
Yeah, definitely. Let's see. Where is it bouncing around here? Here we go.
So,
we went from 39.20 to 39.40, right? Now back down to 39.10.
that could be good, though.
We saw, there was, no matter what the expected was, it looks like there was a rise in the inventories. Can you maybe try and pull up the news and see?
Yeah, let's take a look. So, CLJ6. Okay, so...
Oh, well, the estimate was 3.2 million barrels, so there was 2 million barrels less than they thought there, actually. That should be causing oil to spike a little bit.
So here, crude?
Yeah. That's 1.3 million barrels
Okay.
versus an estimate of 3.2, so it missed by 2 million barrels. 2 million barrels less than they thought. So it should be a spike, right?
Plus, well, is that a plus? That's a build. So that means that there's more build, right?
There's a build, but the expectation was much larger.
Oh, okay.
That's
I got it.
the
Cool.
third time's the charm.
I
Okay.
thought that was 320. Okay, cool.
Yeah.
Okay, right.
So
right.
it missed by about 2 million barrels. So there's
That's pretty
so
intense.
It should be a
So
spike.
let's
that's,
go.
They talk about demand in here too, which
Okay.
I wonder what it doesn't break it down, but that's a part of it as well. And so let's pull the contract back up and see.
Yeah.
Because as we know, this takes some time to shake
yeah.
out. It's
And
been
now
pretty
this-
tame
and-
for
and
the
it-
numbers coming out recently. I mean,
has.
there's been much bigger moves immediately.
And this is where you can actually. So let's go into some of the spreads in oil right now. So
Sure.
39.
Just gonna move this so people can see.
39.10. So
So we're going over here. We're going to the commodities, right? We're going to the commodity spreads. We have crude oil. Let's take a look at the dailies, maybe.
Yeah.
So we're right now trading at 39.10, let's call it.
So it'd be the 38 up there.
Yeah. This is going to be a nice risk reward.
Yeah. So it's pretty good.
It is, and you're only paying about 7 pennies in premium. The market's at 39.15. You'd be getting it at 39.22, and that's for a risk of 120 for 379. That's not bad.
It's not. No. So let me pull up 1 second. So what I have to do in this one, GCJ. What happens is that I don't have these are. We'll see. I like how that worked there. Okay.
I'm surprised it's only 7 pennies. I like that trade. Just
I
because
know.
we just saw it go from 39.20 to 39.40. That's 20 pennies in an instant. The news just came out. The market takes time to digest it. There's still going to be volatility.
There's no doubt. See, let's go look at Exxon, see what these stocks are doing. Okay, so.
Exxon not doing well.
No, that's not bad, though. It's pulling back like into light volume. You know what I mean? That's not the end of the world. Chevron. And then the E-minis. ESM6. Oh, look at it. It's going to go. It's going to go. That little baby still wants to get higher. That's the way this is shaking out right now. So this is going to be wild.
Yeah, the markets are all positive now.
Yep.
And look at oil's getting a little bit of a bounce.
The oil's gonna go, man. Bang.
You want to buy one of those?
Yeah, we just went from 21 to look at that.
It's still a great risk reward.
Yeah.
Now you're only paying actually 5 cents in premium. Is a better way to look at it. Oh, look at it go.
Yeah.
See if you got it.
Okay.
You did.
Okay. So we'll see where that shakes out. That is a good risk reward. There's no doubt, man.
And it's a great risk reward. I think when you look at the premium that you're paying, because you can get any type of risk reward you want in this market. You want to buy a binary for $3, you can get a 33-to-1 risk reward, right?
Right.
But my goodness, you're paying so much premium, you're going to lose that 32 out of 33 times on the average.
Right.
But in this one, I mean, you're only paying 5 cents in premium. You know, the market settles where it's at, and you lose literally $6.
How cool is that? That's
right?
sick.
Yeah.
That totally makes that is sick. Man.
Yeah.
So and what's cool here, folks, is that you get a picture of something. That my take is that the S&P is doing an ABC up anyway. Bonds are going down, and in order for when I do a correlation inside the market, well, in order for the S&P to get an ABC up, oil almost has to go. Do you know what I'm saying?
That would make sense for sure.
So
and we're getting a nice little bounce here, like you said.
Right.
Same thing as we're getting a bounce here. So you're right.
Trade 'em, baby. You stay right there, folks. Tommy and I are coming right back. We have the Dow Industrials up 9, Nasdaq's up 12, S&Ps are up $1.50. We're gonna be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We have the Dow up 14, Nasdaq up 13, S&Ps are up 2. Gold's up $1.90, and the oil's catching a little bit here.
Yeah, we got everything. I wanted to pull up. This is your binary.
Yeah.
I mean, what's interesting, you got in about 660. You can get out at 450 right now if you wanted to. There's still so much, obviously, premium priced into this for 2 o'clock.
Right. Right.
But you know, they definitely got a pop with the S&P with the oil as they came out.
Yeah, and you know, oil has the capability, which is kind of cool here. You can see if you're looking at this chart, it has the capability of doing a small ABC up. You know, which
A,
yeah,
B,
exactly, because it was a very shallow retracement. You know, so it'd be like, that'll really blow some minds. And, you know, we know how oil can run, man.
And would that be the same on the S&P then?
That's the same on the S&P.
Yeah.
Yeah. I mean, you know, this is a market that looks to me like that, you know, on the SPY and the S&P, we have a confirmed ABC up. And what that just means, folks, is that you took out the B point with volume, so your probability is higher that you can get the price projection. That being said, because bonds are confirmed ABC down, that correlation in harmony brings up the probability that they'll both go the same, you know, because that's, you know, now this, of course, the cool thing is that the Fed is at 2 o'clock. You know, so as I said a little bit earlier, if you haven't test drove that Nadex platform, put it up. It's going to cost you nothing.
And this is cool, just pulling it back, you know, a few days. I mean, look at right where we're at. There's been a lot of trading right here.
And this is big.
Right? That's it's just, you know.
It's had a hard time getting through there.
Right on that pin.
Exactly.
These little spikes traded, bounced along. I mean, it's popping right along this level.
Yeah, and there's no doubt. That's the bull and bears fighting right there. There's sellers there.
I mean, it's going to stay within, and this is a big range, you know.
It is.
In terms of for the day. Yeah. There's no way I see it making it out of, you know, right around here, and just wait and see what happens at 2 o'clock.
It will spike. The cool thing is that if it spikes before the fact, it's going to be really wild, man. Because then it can really go wild.
It's like up 150 from here.
Exactly. Before 2 o'clock.
Right.
You know, and if that happens, folks, you'll see it do the whole C to D in one day. You know, and that's the 50 S&P points.
There you go.
That's what that is. You know, and on a Fed day, it can do that both ways. By the way.
Yes. Right.
Yeah,
that's what,
both ways.
There's no avoiding the fact that if it's up or down 150, let's say it's up 150, like, you know, you're talking about, it is getting a pop right now. It could pull back in an instant, no matter what the Fed says.
Well, see, you know what's so weird, and this is when we were talking with Kevin Hinks. Being shot, the notes right now, right, is counterintuitive to the market going up. Well, it would be, that's kind of how the relationship goes in the aspect.
So you're short notes. So you think notes are going down. You think rates are going up.
Yep, and the S&P wants to go up.
Right.
But that's counterintuitive in a longer sense, because if the Fed really puts rates up, this market's going to get whacked beyond belief.
Right.
You know, so that's the thing that's so wild here. Like, I play with this in my head every night.
Sure.
Like, man, okay, so what's really going on?
That's the tough part about being in like zero rates.
It is. Like, because what is the market going to think here? Because it looks to me right now that no matter what the Fed's doing, the market is basically saying, hey, I'm going to raise rates. Mr. Market's saying that, you know? Because the Fed's not saying it.
Right.
They haven't said it.
And why are you saying the market?
Because people are selling it off. Because the
bonds are going down.
Yeah, because the rates have been going up.
Right.
You know?
Right. Very recently.
Yeah, just recently, too. And we're talking small money, but small percentage moves. But in the bond market, that's you know, bonds are, it's $1,000 a point, folks. So it's you know, and it's big dollars. So look at that, right at that same level, man. That's where the sellers are inside the S&P. Right, what you just brought up.
Right, no, for sure. And that's, you know, I saw this level, which was interesting, and, you know, and that's what you should do is, you know, get a perspective, pull it back, and then it's like, oh, that's even more interesting. You know, there's more, and then you pull it back, and then guess what? Wow, it's even more interesting, right?
Yeah. Let's pull up. I want to pull up the E-minis just on this side so I can see.
Go for it.
Yes. So we have.
It's quite a volume spike at that.
It is. No, it's a good one. Yeah, that's a good one. Okay, so you get some juice behind this move, man. This is gonna. So it's gonna have to build some good cause to get into this 2010. So 2008 we're at. It hit 11. That's where the sellers are. You know, but thus far, this volume picks up. Oh, I see it right there. Look at that. That's the number. So how we came down, folks, on that's the 14th
Monday.
Right before the close. That's what it's going into. So it's going to need more volume to get up and over this level here, because that's where the seller is. We did 72,000 contracts when the S&Ps went from 2013 to 2009. And that's, you go up to 2011, and that same seller is saying, take them all. Take them all.
Sure.
Take them all. Seriously, man. Let's go take a look at inside the Dow with the strength versus the weakness. So the strength out here, you got Caterpillar. That's up 75 cents. JP Morgan's 51. Apple is 66. And Boeing is 77. The weakness is Coca-Cola, 62. Pfizer, 34. Merck, 44. Inside the NDX 100, the strength is Endo International. This stock is a dog, though. Watch this. This is
10% today.
10% today. But look at this is a stock that, you know, came down from $84 6 months ago. You know, so you always, you know, pay attention to that because
sure.
Charter Communication. That's what is this? A takeover or something? What is this? That's quite a move. Oh, Time Warner deal. Okay, FCC may circulate draft order approving the Time Warner Charter deal. Okay, that's up. That's up good. So we're still looking at the NDX, which moving it. Regeneron is up $10, and Viacom is up 90 cents. Taken away from it, you get Expedia down $3. You get eBay off 37 cents. Now that gets interesting. See, if that's one of the largest moves on the downside, Electronic Arts is off 95 cents and Vertex is off 116. That is saying you got somewhat internal strength inside that NDX 100. And that's what it's going to need for a higher price too, man. VRX, this stock. Did you see, Tom, when we got off the air yesterday, this was still at like 45.
I did. And I was watching your show yesterday, and I saw you pull up that Ackman. It looked like he had all those shares, right? At the number changed. That
The
he
number
had.
changed.
I know.
Yeah, let's
I was
do it
watching
again.
your show. Yeah.
So watch this. The number changed. What we're talking about,
It's
folks.
interesting, right?
Yeah, in the middle of the day. It's amazing, actually.
Yeah.
So here it is here. The number changed from
Pershing Square.
Yeah, from 14 million to 5 million that he bought on the 9th.
And his position was right around 30 million.
It was.
I remember because
and
it was easy
9.
math.
It was 9%.
So
and then
turns out he had 9 million less shares than we thought he had yesterday, which is like over a $250 million difference.
Yeah.
Pretty interesting. He still had a rough day, but not as rough as.
Yes, it could have been.
It could have been $250 million worse.
Yeah. My God, what numbers. You stay right there, folks. Tommy and I are coming right back. Dow Industrials are up 13, Nasdaq's up 13, S&Ps are up $1.50. We're going to be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016, and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. We have the Dow up 9, Nasdaq's up 10, S&Ps are up 1. And, of course, don't forget, folks, every Monday, Wednesday, Friday, 8 o'clock in the morning, 5 in the afternoon, we do live programming. Tuesday, Thursday, 7 o'clock in the morning, 6 in the afternoon, all of it right in your cell phone. TFNN.com, just hit Tiger TV. Comes in great. HD.
You got it?
You know, has it all, man. Let's go back to that oil market and see where oil's trading.
That's the S&P.
Okay.
Let's pull up our oil. Oh, that's not going to give us, there we go.
So we had the oil numbers come out. Oh, this is good. It's building costs for higher price.
Oops.
Yeah,
Yeah, it's hanging right at that level.
It is. It's flat, you know, at this 39.40, but that's a good setup, man.
This is a 5-minute chart, so
yeah,
it's been hanging here for a good 20 minutes almost.
It's hanging at those highs, man.
Those numbers came out at, and this is the 30 bar right here. So we were as high as there during the 30 bar.
Yeah.
Came back down, and now we're right back up to that level for a while.
And folks, you know, don't forget, we do the show every morning at 10 o'clock. So join us tomorrow morning, because tomorrow morning we have gas numbers.
We do. And the market will still be digesting whatever happens at 2 o'clock, I'm sure.
It's so here, if we look at gas for a second, I'm getting excited about gas.
You're looking to go long gas at some point, right?
I am, and I haven't traded it in like a few years. And what's really cool is that natural gas...
You're getting a much better price than you would have gotten a couple years ago.
No, totally. and not only that, what you want to do is you want to trade this, you know, inside the Nadex product, the same deal. Because what happens, folks, with natural...
Okay, you're excited to trade it around the news.
Exactly. Natural gas, now, you're only putting up $1,800 now. Check this out. When I was trading natural gas, do you know what it was per contract? $10,000. Wow. $10,000 per contract.
It would make sense, because it's under $2 right now. What was it at then?
It was probably 4 or 5. Yeah,
I bet it was above $4.
$5, $7,
yeah, right.
And every point is $10,000.
Sure.
You know, so that's you know, and every point is still $10,000. Okay, but there's no way it's not going to move 50% in a day. Well, it shouldn't anyway.
Right.
You know, but the way that natural gas is setting up. See, I'd like to buy it at 190. We're at 193 right now. Oh, hit 190 today. 1.909. And what that is, on the 10th, you had some beautiful volume there, right? 1.906. So it's going to be pretty wild. And, of course, don't forget, you stay right there. Then Mr. Basil Chapman's going to be coming up next, walking you into the Fed meeting. Then TD Ameritrade, Thinkorswim. Basil is actually going to be doing Steve's show, which Basil's a trooper,
Basil
man.
At 1 o'clock.
Thank you so much.
Gearing up for the Fed at 2, right?
Oh, that's good. That's right.
And then Dave will come back at 2 o'clock and break down the market leading into your show with some exciting market action, I'm sure.
And the volatility's out there.
It's not out there right at this moment, though, right?
No.
It's going to be out there. I mean, it's you know, I think we've had like 15 points of Dow movement the whole hour. We went from like minus 8 to plus 12.
Totally.
That hasn't happened since we've been doing this show together, and of course it's just waiting for 2 o'clock.
It is waiting.
Yeah.
There's no doubt.
Yeah.
What you do have, and this is pretty cool, so the DAX over in Germany, folks, the DAX in Germany is in an ABC up also. And, it's not that it's moving a lot today, but bottom line is that it's over those highs. We're up 59 points. The B point out here is 98.99, and you're at 99.93. So you're 100 points over it, over the B point. And it took it out with volume. And that's saying, hey, when you start putting all of these together, you get the S&P, a confirmed ABC up, the DAX confirmed ABC up, the 10-year note ABC down. My bear suit, man, is still hanging in that closet.
It'll be ready for whenever you need it, I'm sure.
Yeah. You stay right there, folks. I'm Mr. Basil Chapman's coming up next. Thanks, Bill.
Thanks, man.
Have a great one. Have a safe one, folks. Thanks for being here.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.